Hey everyone, in this video I was going to compare two up and coming innovative growth stocks in Canoo, GOEV, ticker symbol GOEV, and QuantumScape, ticker symbol QS. I was going to compare these two stocks across several financial metrics and come up with an answer on which one of these two is the best stock to buy right now. So let's begin. Starting with cash, right? The reason I start with cash with these two companies is because they are what I like to call pre-revenue, right? They haven't made any sales just yet. They're not generating revenue just yet, although they can in the near term over the next 12 months. They might start generating sales. Canoo is planning to produce electric vehicles, whereas QuantumScape works on a lithium type battery for electric vehicles. So one is an actual electric vehicle producer and seller. The other one is just working on innovative battery technology, and QuantumScape's recent prototypes have proven to be really exciting, and Canoo as well. Their prototype they just sent to the military looks exciting, and they have an order from Walmart. So both exciting up and coming companies, although they are running low on cash because they're not generating sales yet and they're losing a lot of money. Looking at that, Canoo has just $36.6 million in cash left, while QuantumScape has $241 million in cash, and QuantumScape actually has liquidity of closer to $1 billion. The next thing I wanted to look at is average diluted shares outstanding. This measures how many shares of stock the company has outstanding. Again, this is important for companies that are pre-revenue because it's one way for them to raise money is to sell more stock and raise more money to get them to bridge the gap between when they start generating sales. And looking at this metric, Canoo has increased its average shares outstanding from, let's say, about 100 million up to 326 million. So they've tripled their shares outstanding from July of 2020 to January of 2023. Meanwhile, QuantumScape has less than doubled. So it went from 240 million to 440 million shares outstanding. So they haven't increased their share count as much as Canoo has. So Canoo has diluted their shareholders more, which is less attractive. You prefer less shareholder dilution because when they eventually become profitable, or if they eventually become profitable, those profits are going to have to be split among more shares. So the fewer shares means more profits per share. The next thing I wanted to look at is their stock price. So looking at Canoo, the stock price was trading at 66 cents as of this video, and it reached a high of over $18 per share at the boom times in 2021, where everybody and their cousin wanted to invest in anything related to EVs, right? You can remember those times. The stock price is down significantly off those highs. Similar to QuantumScape, the stock price is trading at $6.22. That was down from over $120 per share around January of 2021. So hopefully you were not one of these investors that bought these stocks during these times. Those that did, unfortunately, ended up losing a lot of money during this time. But now the stock prices are down significantly off those highs. They're not trading at these hyped up valuations that they were at in early 2021, which is good news if you're interested in entering and getting into these stocks right now because their prices are much more attractive. Now I also wanted to look at the market capitalization of these companies, which takes their stock price and multiplies it with the number of shares outstanding to get the total market capitalization. And looking at that, Canoo's trading at a $315 million market cap. That's down from over or close to 4.5 billion. And QuantumScape is at 2.755 billion. That's down from close to 50 billion. Again, both significantly down from their high point. And finally, I wanted to look at the forward price to sales ratio because I wanted to incorporate what Wall Street expects in terms of these companies generating sales over the next year, and then incorporating the current market price versus where the sales are expected to be over the next year. Looking at this metric, Canoo is expected to start generating sales sooner, it looks like, because their valuation is at just 0.419 according to this metric, whereas QuantumScape is at 491.2 according to this metric. So, in the end, if I was to pick between one of these two stocks to buy right now, I would pick QuantumScape. I would pick QuantumScape because QuantumScape has more cash on hand to bridge it until it gets to revenue. Secondly, I like that QuantumScape is working on battery technology versus Canoo, which is making EVs. So QuantumScape can benefit from the rise of the EV industry as a whole, which I do expect to increase and rise over the next decades. Whereas Canoo, I don't know if they're going to succeed amid all of that competition in EVs, right? So they need to beat all the other EV players or survive amid all the other EV players. Whereas QuantumScape can benefit just from the rising industry, and I think that industry is going to absolutely explode. So I think there's going to be room for several battery providers in that industry. Again, that's just my preference to be sort of the going for the pick and shovel play versus actually going after the gold, if you've heard of that saying before. So that's all I've got for this video. Now remember, these are both very speculative stocks. These are not for the risk averse investor. These are both for somebody who is looking for very high risk and very high potential reward. Keep that in mind before you consider one of these two innovative growth stocks. All right, that's all I've got. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.